In 2017, a single altcoin called Ethereum rose over 13,000% in 12 months. Bitcoin, in that same period, gained roughly 1,400%. Both numbers sound incredible, but one of them is nearly 10 times larger than the other. And that gap is the entire reason this debate exists. Welcome to BlockVault Daily. Today we are diving deep into one of the most argued questions in all of crypto: altcoins versus Bitcoin. Which one actually has more potential? And before you assume you already know the answer, stay with us. Because the data tells a story that most people in this space are not willing to admit out loud. We will cover the history, the mechanics, the risk profiles, and we will end with one insight that genuinely flips the conventional wisdom on its head. To understand where we are today, you have to understand where this all started. Bitcoin was born in 2009 out of the wreckage of the global financial crisis. Satoshi Nakamoto released a 9-page white paper proposing a peer-to-peer electronic cash system that required no central authority. No banks. No governments. Just math and cryptography. For the first 2 years, Bitcoin had almost no monetary value at all. It was a curiosity shared between cypherpunks and early internet libertarians. Then in 2010, someone paid 10,000 Bitcoin for 2 pizzas. That transaction, worth about $40 at the time, would eventually represent a purchase price of over $300 million at peak Bitcoin valuations. The first altcoins emerged shortly after. Litecoin launched in 2011, marketed as the silver to Bitcoin's gold. It offered faster transaction times and a different mining algorithm. Namecoin also appeared around the same period, attempting to create a decentralized domain name system. These early altcoins were essentially Bitcoin clones with minor technical variations. Nobody could have predicted what the altcoin category would eventually become. Then came Ethereum in 2015, and everything changed permanently. Vitalik Buterin's invention was not just another cryptocurrency. It was a programmable blockchain. A global computer that anyone could build on. Smart contracts meant that agreements could execute automatically without a middleman. This unlocked decentralized finance, non-fungible tokens, decentralized applications, and eventually an entirely parallel financial system. The altcoin category exploded from dozens to hundreds to thousands of projects almost overnight. Today there are over 20,000 cryptocurrencies listed across various platforms. The vast majority of them are speculative tokens with no real utility. But hidden within that enormous pool are projects solving real problems: supply chain verification, decentralized data storage, cross-border payment infrastructure, digital identity, and prediction markets. The question is not whether altcoins have potential. The question is how that potential compares to Bitcoin's, and what the true cost of chasing it actually looks like. Bitcoin's value proposition has always been clear and narrow. It is digital gold. A scarce, decentralized, censorship-resistant store of value. There will never be more than 21 million Bitcoin in existence. Roughly 19.5 million have already been mined. Every 4 years, the amount of new Bitcoin entering circulation gets cut in half, an event called the halving. The most recent halving occurred in April 2024, reducing the block reward from 6.25 Bitcoin to 3.125 Bitcoin. Historically, each halving has preceded a major bull market within 12 to 18 months. This is not coincidence. It is basic supply and demand working inside a mathematically fixed system. Institutional adoption has also transformed Bitcoin's trajectory. MicroStrategy holds over 200,000 Bitcoin on its balance sheet. Publicly traded companies, pension funds, and sovereign wealth funds have begun treating Bitcoin as a legitimate reserve asset. BlackRock, the largest asset manager on Earth, launched a Bitcoin ETF in early 2024. On its first day of trading, it became one of the most successful ETF launches in financial history. When the most conservative financial institutions on the planet start treating an asset seriously, that changes the risk profile in a fundamental way. But here is what nobody talks about when they celebrate Bitcoin's institutional credibility. That same credibility creates a ceiling on its explosive upside. Bitcoin's market capitalization already sits in the trillions. To double from here, an enormous amount of new capital has to flow in. The math becomes harder at scale. This is exactly where altcoins become interesting and dangerous at the same time. A project with a market cap of $50 million only needs $50 million of new buying pressure to double in price. That can happen in a single afternoon during a crypto bull run. This is the mathematical reality behind the altcoin promise. Smaller market caps mean larger percentage gains are theoretically achievable with less capital. In the 2021 bull market, tokens like Solana rose over 11,000% from their early 2021 lows to their November 2021 peak. Avalanche gained over 3,000%. Even mid-tier projects with real development teams delivered returns that Bitcoin simply could not match on a percentage basis. But the other side of that coin is catastrophic. Of the 20,000 plus cryptocurrencies that have ever been listed, the vast majority no longer exist or trade near zero. Projects that raised hundreds of millions of dollars in venture capital have collapsed entirely. Terra Luna was once a top 10 cryptocurrency by market cap, beloved by institutional investors and retail traders alike. In May 2022, it lost over 99% of its value in 72 hours, wiping out approximately $40 billion. Bitcoin dropped significantly in that same market panic, but it did not go to zero. It never has. And it has recovered from every single drawdown in its 15-year history. This is the core asymmetry you need to understand. Altcoins offer higher upside potential and higher downside risk. Bitcoin offers more modest upside with dramatically stronger historical resilience. Neither choice is universally correct. It depends entirely on your time horizon, your risk tolerance, and critically, your ability to do the research required to separate real projects from elaborate scams. The concept of Bitcoin dominance is worth examining here. Bitcoin dominance measures Bitcoin's market cap as a percentage of the total crypto market. When dominance is rising, Bitcoin is outperforming altcoins. When dominance is falling, altcoins are collectively outperforming. Historically, the cycle works like this: Bitcoin leads the early stages of a bull market, new money flows into the most recognizable asset first, then as confidence builds, capital rotates into altcoins seeking higher returns. This altcoin season can be spectacular when it arrives. Identifying when that rotation is beginning has made fortunes for investors who understood the pattern. But here is the analytical reality that changes how sophisticated investors approach this question. They do not actually choose between Bitcoin and altcoins. They use Bitcoin as their anchor position and allocate a smaller, carefully chosen percentage into high-conviction altcoin positions. A portfolio that is 70% Bitcoin, 20% established altcoins like Ethereum or Solana, and 10% in earlier stage projects gives you asymmetric exposure without betting everything on projects that could disappear overnight. Ethereum specifically deserves mention as a category of its own. It has proven network effects, over 1 million active developers building on its ecosystem, and a deflationary token model since the merge in 2022. It is not Bitcoin, but it is also not a typical altcoin gamble. It sits somewhere in between, a programmatic layer that the entire decentralized economy is being built upon. The regulatory environment also matters enormously to this comparison. Bitcoin has received the clearest regulatory treatment globally. The SEC has explicitly stated that Bitcoin is not a security. The same clarity does not exist for most altcoins. Regulatory crackdowns in the United States and Europe have targeted tokens that resemble unregistered securities, and the legal uncertainty creates genuine existential risk for projects that might otherwise have real utility and strong teams behind them. So which has more potential? Bitcoin offers more certainty, more institutional backing, more regulatory clarity, and a proven 15-year track record of surviving everything the world has thrown at it. Altcoins offer more explosive upside, more innovation, and the possibility of finding the next transformative technology before the rest of the market prices it in. The honest answer is that this is not a competition. They serve different purposes within a portfolio. Before you go, if you learned something valuable today, hit that like button right now. Subscribe to Block Vault Daily for a brand new video every single day. We will see you in the next one.